Welcome to Inspire Better Banking, Future of Banking. In this podcast, we interview the leaders of fintech industry. And today we have guest Samrah Kazmi, who will be joining us from New York. She has a diverse knowledge of in cybersecurity, in RegTech and ESG. So let's dive into this podcast. Welcome, Samrah, to our this podcast. And for the benefit of our audience, if you can introduce yourself, that will be good.
Thank you, Raktim. Great to be here. I'm really excited to share my insights with you and your audience. My name is Samrah Kazmi. I'm based in New York. I have about 3 decades of experience in financial services and technology. Some of the seminal moments in my career where I led the merger of the New York Stock Exchange with Intercontinental Exchange, as well as the $200 billion risk transformation of GE Capital, which is the which used to be the financial arm of General Electric, the largest industrial, up until a few years ago. I also was a co-founder in a fintech startup, so I do understand a lot of the innovation aspects of it and the bank fintech partnerships. And I have a bit of a diverse background. I did run a green bank, which is basically lending based on renewable energy, as I was working at PSE&G, which is one of the largest utilities here in the U.S., specifically on the East Coast. So I'm excited to share some of my insights with you.
Thanks, Samrah. I think it's quite a diverse set of topics which we will try to cover. So to start with, Samrah, which are the new opportunities and challenges you are seeing in the banking sector, in the financial sector, especially in your region? And I know as such you keep on traveling, so you can give a glimpse of from the other regions also. But which are the main opportunities and challenges in the banking and financial sector you are seeing at the moment?
Yeah, I mean, I think the challenges generally have remained stable regardless of, how things have evolved in the industry. But I'm going to say the trends and the challenges are pretty much the same. They're interchangeable if you talk about financial services. So the main trend is one of the main trends is obviously regulatory. So there are evolving regulations on an ongoing basis. And this has been going on since the financial crisis of 2008 onwards. So financial institutions are really focused very much on regulatory compliance. The other aspect is obviously the technology embedding of into financial services, so as we call it, fintech. So we've seen a lot of digital transformation going on again, mostly since really the financial crisis, or in the aftermath of the financial crisis. So that's been an ongoing, almost 2-decade-long project. And on top of it, now we've seen a lot of new technology come in the form of fintech, regtech, even cyber solutions. But what we are seeing now is this real big push for AI, and specifically generative AI. So that is another thing that, in addition to the digital transformation efforts that we are seeing in our in our financial institutions, we're also seeing now this transition, or this almost integration of AI transformation within the digital transformation effort. So that is another trend, and that is obviously a challenge for, and we'll talk about the challenges in a bit, but that is a challenge for financial institutions. And the other thing is, this push around governance and social awareness and social responsibility. So you can talk about initiatives like ESG. You can talk about initiatives like CSR, which is corporate social responsibility, environmental social governance, diversity, equity, inclusion, and belonging. So that's the other trend that is driving, even despite the fact that we've seen a very large amount of backlash towards ESG initiatives here and DEI here in the US. Banks are still going full steam ahead with these initiatives and really focused on these trends. And finally, with all this technology coming in to our institutions and really becoming pervasive in society, the other trend that is driving financial institutions and is also a challenge for financial institutions is cybersecurity. And we can talk more about the supply chain issues, etc. But these are really the trends. And having said that these are the trends, these are also the challenges, and these are also the opportunities. So, it is for an institution, especially for incumbent financial institutions that have been around for a very long time, that have constantly struggled with integrating core infrastructure with new and emerging technologies. It is important for them to now step up and really become much more bold in their transformation efforts, because that is where the opportunity lies. Previously, especially before the COVID-19 pandemic, we saw financial institutions sort of holding back on their digital transformation efforts. And then we had the pandemic where we saw a lot of remote work and, so much disruption that these institutions had to embrace digital transformation overnight almost, and they saw that it actually worked. So all that hesitation for years was for naught. So again, and they realized the opportunity it holds. So in the same vein, AI is a huge opportunity. Cybersecurity is a huge opportunity, and this is going to lead to not just modernization, but it's going to lead to many more, I would say, initiatives or many more benefits for the organization itself, including product innovation, including strategic decision making, etc. So, and just opening up value creation.
Thanks, Samrah. And you have very rightly pointed it out that digital transformation, which banks were a little hesitant before this pandemic, but I think maybe pandemic forced and everybody adopted, and now they are fully embraced that. So, Samrah, again, Gen AI, of course, is a big topic. Have you seen adoption of that in the banking circle, in the financial industries, or any specific use case where you are seeing Gen AI getting adopted? If you can give us some examples here, that will be helpful.
Yeah. So, the one thing I'm going to say when it comes to banking or even healthcare, which are two very highly regulated industries, adoption of anything like emerging technologies basically is really tough, even though there can be some very obvious use cases which can be very easy to implement. Yet financial institutions have to be very cautious because of the regulations that they have to comply with. So for instance, we are constantly talking about large language models. In the financial services industry, most of the incumbent banks, 50 to $100 billion AUM, they are actually they need to comply with various regulations. Specifically, one of them, for bank stress testing, there's something called the Federal Reserve's letter SR 11.7, which is all around model risk. Now, that was originally created for statistical models, and now it's that has to be extended for AI models and large language models. So even small algorithms, really like simplified algorithms, fall under this. And they need to be audited, they need to be monitored on an ongoing basis, etc. And you need to really justify and defend them, not just to the business users, but also to the regulators and the supervisors. So when it comes to AI use cases, what I have seen, and actually I do advise several financial institutions, governments across the world, and quasi and non-quasi government organizations. So what I saw last year, or pretty much, as we had the Gen AI boom start, and the hype around it start, what I saw was a lot of education at the board level, at the C-suite level, but a bit of a hesitancy. And then there was this almost FOMO, fear of missing out. So what financial institutions could actually do is they could incorporate productivity tools. So embedding it in their Outlook, embedding it in Slack, Jira, whatever it is, and GitHub. But actually, when it came to decision making, because of the embedded biases and the lack of and actually, for both financial services and healthcare, they also have to comply with privacy regulations. So PII, which is personally identifiable information, needs to be protected. So it's really difficult for large financial institutions to actually have these open source large language models implemented in their organization, because if you take, and we've seen instances of these, if you anonymize personally identifiable information and you combine it with open source information, sometimes you can unmask that anonymity. So that is one of the reasons why financial institutions need to be more cautious, and why many of the obvious use cases that are easily implementable have not yet been implemented. Also, we don't have clear regulatory guidance, even though there's an EU Act and Congress is working on it, but really we don't have that. And also around the governance of AI, the responsibility, the ethical aspects of all these digital tools. So what I have seen is a lot of these institutions are using their own proprietary data into these large language models, which now become small language models because we're not using all of that information, and then they use it in-house to gain these insights to actually make strategic decisions and create value. So I have seen that happen a lot. So the productivity aspect of it is obviously full steam ahead. The decision making is, and especially when it comes to lending decisions, when it comes to actually, customer facing decisions, that has actually, it's on a much slower pace. When it comes to data, insights, strategic decision making at the level of the board, at the level of the C-suite, yes, that is something that we have seen a lot. And combining all kinds of data, combining open source versus proprietary information, that is where we've seen a lot of value, and those are the use cases that we've seen currently occurring. So yeah, I would say that there is definitely progress, but there is certainly a lot of caution. One example, for instance, is when it comes to financial or wealth management. So it's very easy to say that you can create a bot, a generative AI solution that can offer advice to customers on investments, or even create portfolios. Now, one of the things is the SEC has regulations where you need to be a licensed financial advisor. You need to have your Series 7 and 63 and 65 and so on and so forth. And a bot doesn't have that. So a bot is not really going to be an acceptable financial advisor. That is such an obvious use case. It is actually a very easily implementable use case. Yet, in the foreseeable future, I don't really see it happening. Although, there are generative AI solutions that we've seen in wealth management being implemented. They can provide you with provide customers with a lot of insight on their portfolios, on their future goals, on creating scenarios. But when it comes to something like this, I see there's going to be some challenges, and it's definitely going to take some time.
Thanks, Samrah. It's very useful, and I think you have touched a lot of things, especially for our financial industry and the health industry, both being regulated. And though we in theory, can talk about that bot can do this, bot can do that, and very apt example, because in fact, I was also reading that, yeah, there are wealth management cases of, portfolio optimization, risk profiling, but they are not regulated by or they have not done the certification which is required them to put a decision there. So yeah, you can get insights from that, and that can help, tying back what you said, to improve the productivity of the relationship manager. Maybe he need not do all the things. He can get insights from all those things, but finally a human has to do. But now that brings me to another question. And that is always a debate of innovation and the RegTech, because for the innovation to really flow, you will not, you'll feel like that regulatory part should not be there, but those guardrails are important. We also understand after being in this industry. So what will be your advice to the banks who are adopting this new technology, who certain part of the bank and the banking team will surely want to innovate, and then some will say that, yeah, we have to follow the regulation. Sometimes it is bordering on that I'm not able to move ahead because of the regulation. So how do you balance it out? And what is your advice to those banks who are listening to this podcast?
Yeah, I think it's a bit. I think it's twofold. One is really how can so there's always this tension between regulation and innovation, right? You said it yourself. And one, I just want to give an example of how it's panned out in two different jurisdictions. So right after or during the financial crisis of 2008, which almost went on to like 2010, what we saw in the UK is, a sandbox was created where all these financial services companies and startups came together. They experimented within guardrails given to them by supervisory authorities, the FCA and regulators, etc. So we saw innovation really come to life in the UK. You saw a lot more challenger banks coming out of the UK and the EU, etc. On the other end of the spectrum, here in the US, what we saw was regulate. We saw the Dodd-Frank Act of bank stress testing and so on and so forth. The Volcker rule was being socialized and so many other things. The CFPB was being given a lot. And I'm not saying that was all unnecessary, but it was excessive to a point that most financial institutions were distracted with just regulatory compliance. They were burdened with fees and penalties and fines that they had to pay to the regulators for compliance or for various indiscretions in the past, and for the fact that all these new regulations had forced them to hire so many more staff in their risk, compliance, governance departments, IT, so on and so forth. And at that time, there wasn't that many reg tech products as we call them today. So there wasn't much automation. So banks were really just, in the US, were really overburdened by regulatory compliance, and they could not think about innovating. Which is why I would personally say that, UK leapfrogged when it came to innovation, especially in financial services, while the US was held back. And it was really the two different approaches to regulation and innovation that both jurisdictions took. So now moving forward, I personally feel that, regulators, government, supervisory authorities should provide to financial institutions this element of the guardrails, which is a sandbox, where there is supervision, but there is a lot of experimentation, a lot of innovation occurring. So that's one thing that needs to be done, and it's unfortunate that there aren't as many sandboxes, regulatory sandboxes in the U.S. now, almost 2 decades after the financial crisis. So that's one thing. The other thing, when it comes to financial institutions, what should they do? That is also a fine line, because the business wants to innovate. The business wants to, there's always this tussle between compliance, IT, and the business people who are customer facing, because they feel like, oh, look, we're in 2024. The whole world is embracing and embedding generative AI into their products. And here we are just sending out traditional emails. So they are really frustrated. And the compliance and the governance and the legal and all those, the regulatory departments really want to see another institution, a peer institution, make that first move. Okay, before they make their move. And that, I feel, is also not productive. So, which is something I mentioned earlier, like financial institutions have to be bold, within reason, obviously. So there are enough guidelines when it comes to, the US doesn't have something as robust as GDPR, but U.S. financial institutions can use GDPR as a, guideline, because it is so robust. Similarly, we can use the EU AI Act as a guideline until we get clarity from our own regulators. So I think that there has to be this working together, thinking about how we can innovate in a responsible way, give the customer a better experience, but do it in a way that is responsible, ethical, that protects our own reputation as an institution. And I think in the last investor meeting that Jamie Dimon had for JP Morgan Chase, he did not speak too much about AI or emerging technology, which he usually does. But the aspects that he talked about was the reputational aspect, the responsible aspect, the ethical aspect of AI. So I really think that if institutions keep that as their North Star, they are going to be, think about how they can serve the customer in a responsible manner, giving them that customer experience that is desired by the customer, then I think that there can be less friction, and there can be a lot of gains for every institution.
Thanks. It's wonderful. You have rightly connected the dots of UK, the open banking, the way they have come out with the sandbox, with the PSD2 and then GDPR, and why it cannot be replicated or something inspired by that, whatever the EU regulations are there, that can be the North Star till other things can be ironed it out. But here is like one country, or maybe I will say the set of countries which have already moved ahead. So US banks also have to look upon it. It's a very good observation, and I think a sort of solution also. The sandbox, it can be in some other forms also. It can be incorporated where you get to experiment within the guardrails, and then you can take calibrated step to move forward.
Right.
Thanks. So, Samrah, we'll go to the next one, and which I think is your expertise also, apart from other things, is cyber security. And I was listening on your one of the webinar on zero trust. So, with respect to the banking professionals, what will be your advice? Because this is like whatever you do, somebody is always catching you. Many times you are doing a catch-up game, because maybe 5 years back, what was there now, that is like by default is everybody is either hacked it or they know it. So you again have to spend a lot of money, energy on that, because the cyber security and then this part is there. So what will be your advice to the bank? How do you tackle that?
Yeah, I mean, I think that's also a very loaded question. Regardless of what we're talking about, the criminals are always like 1 to 2 steps ahead of you, right? When it comes to cybersecurity, the criminals are usually 5 steps ahead of you. Now that we add generative AI, there are you can't even count those steps. So we have to recognize that we're always under threat. And when it comes to cybersecurity, there is no foolproof solution. I think an average bank, an incumbent bank, is being targeted millions of times during a day. There are all kinds of threats that are coming in. If you look at their mobile platforms, if you look at some other digital aspects, you look at all the contractors that work for them that are not embedded in their own network. You look at the supply chain. Now every bank has third-party vendors that, if you talk about fintech and bank partnerships, they've got that. Since the COVID pandemic, we've got a profusion of remote workers. Some of them are using their own devices, which are not optimized for security, regardless of how much the bank really tries to bring them online. So we've got all these factors that are going on, and of course now with Gen AI, the threat actors can manipulate, can create deep fakes, can create cheap fakes. So there's so many threats out there. And how do you really, there is no silver bullet. There's no foolproof solution. And we did, yes, zero trust are these guiding principles that were actually introduced over a decade ago by Forrester, the analyst firm, and one of the poster child for its implementation is Google. So Google has implemented it very early on. Like they had a massive data breach, and then after that they decided to go the route of zero trust. Now, that was pretty easy for, not pretty easy, but that was relatively easy for a company like Google, which is a tech company, which is a much younger company than the banks that we talk about, because the incumbents are still operating on 30 to 40-year-old technology. Their core infrastructure is that old. So for them to rip and replace everything and make it zero trust compliant, for instance, it's not, and zero trust is not one solution. It's obviously a principle with several different aspects of it. So it is very difficult especially for an incumbent organization which has all kinds of endpoints that may not be secure. Again, there are ways of sort of making sure that if you do face a threat, or if a threat actor enters your network, your goal needs to be how quickly do you identify that threat? So the time to discovery and the time to recovery need to be really, really tight, like need to be as short as possible. That should really be the goal, because we don't even know what's happening, how the threat actors are evolving. So some of the basics, I always say go back to the basics. So basics are, making sure you've got really robust cyber hygiene across the organization. There should be a tone from the top that, we prioritize security. This is one of our foundational elements in the organization. The fact that, making sure that you go through a very robust due diligence process for all your third-party vendors. And sure, we can talk about the SolarWinds fiasco that happened a few years ago, which, their threat actors entered through a patch that needed to be updated in SolarWinds. And if you didn't update that patch, those threat actors were able to permeate your organization. And because this was a very widely used software, these threat actors permeated government institutions. They've permeated the Department of Defense, large corporates, small startups, and so on and so forth. And before they were discovered, they had already been in these systems for at least 9 months. Now, that should be unacceptable if you had the robust cyber hygiene, if you were able to constantly, and especially if you had, guidelines and principles of zero trust implemented, where, you only, and zero trust is basically, you only have access to what you need to have access. So if you had those principles embedded, if you had proper cyber hygiene. So at this point, again, there are several RegTech solutions, cyber solutions that automate these things for you, that ensure that they are constantly monitoring not just your network. You've got devices, you've got the cloud, obviously, you've got whether it's at a third-party warehouse, etc. You've got to be monitoring every aspect that comes into that is connected to your network. But the other thing is also educating your workforce on it. And it's not just your employees, but also your contractors. There should be a burden of responsibility on all your supply chain, on all your contractors, making sure that they've gone through a certain level of training based on your practices when it comes to cybersecurity. And I think that, just doing that much is going to really ensure that you've got this time to discovery, and time to recovery lockdown. And obviously having committees when it comes to, making sure that if there is an incident, how do you inform the board? Also, when there is an incident, how to actually communicate, because now under President Biden's Critical Infrastructure Act, you need to, from the time of discovery, you need to actually inform the law enforcement, and you also need to inform the affected parties. So again, if in financial services, healthcare, if it is, and both of these industries are part of the Critical Infrastructure Act. So if both of these, if PII is breached in any of these, again, these institutions are not only going to be scrambling, but they're also going to be on the back end paying tons and tons of fines. So the other thing, I know that large financial institutions always have this, which is cyber insurance, but now they also must require their vendors to have that, because that's also something that is going to be, not just a belts and suspenders approach, but it is just good practice.
Yeah, thanks. And I think you have told some very important thing, starting with back to basics, some simple things, the zero trust, like just have what you really need and don't have the plethora of information with you, because you may not realize and that information can be used by anybody else. And similarly, what I really liked which has really stuck with me, yeah, Google was able to implement zero trust, but they are the technology company, and we can still say with respect to the banking industry, they are a newcomer that way. Banking industry is like, centuries old, with a lot of technology, with different mindset, let me put it that way. But a guy who is trying to hack will not look at it that because you are centuries old, so I will give you any concession. No, he will go and hack because he gets money. It's a very important point, and I think whoever is listening to this is like they all have to understand that Google was able to do it, but all banks also has to do, irrespective of the technology is what you have, as well as Samrah, the point what you touch upon, because now each bank has a ecosystem where you have various vendors who are providing various services to you, or together you are going to the customer. And if any problem is there in your partner ecosystem, one partner get into problem, maybe you are also into the problem. So the insurance part, what you discuss, yeah, it equally applies to them, because everybody has to get protected against that. Yeah, and I know it's a big topic. You are expert in that. Maybe we'll do one more on that. So I'll just go to next one on the green banking, on the ESG. Because we keep on getting, though personally I believe in that, but if I put somewhere it get talked about the greenwashing, in the sense one of the person of big asset fund manager also has said or he came under criticism because everybody said that everybody is looking for the return. So how does it why you are talking of this putting into the ESGs, though it is important. So again, what will be your advice, and how do you see it's really getting adapted by heart, these practices? And then what about the bank's customer? Because we all look for the return, but again, everybody has a responsibility towards the ESG. So what will be your lesson if banks has to approach to their customer, why they should be together practicing ESG thing and the green banking? What will be your message and your thoughts on that?
Yeah, this is also, again, a very interesting question. And what I'm going to say is we, as an industry, financial services, as well as tech, especially, we've really struggled with ESG. First, there was, whispers of it, and then there was this massive embrace of it around the pandemic and in its aftermath. And then we saw a lot of pushback where, it was all about returns. And the fact that, some of the people who are actually being put in charge of these initiatives aren't deserving. They're just, part of the whole DEI criteria. And I really think that there are many issues. This is a very noble cause, and obviously it needs to be implemented and embraced, but we have a long way to go. So a few things, you did mention greenwashing, and I'll go into that a little bit, but a few things that, there are two different things. One is customers, a bank's customers. The other is a bank's investors. They have different priorities. So a customer, especially today, when we talk about millennials and Gen Zs and Gen Alpha, they put a lot of weight on ESG, CSR, DEI, and DE&IB, all of these initiatives. They are coming from that social leaning. And I'm not saying everybody, but generally, if you talk in generalizations, that is, they support these initiatives. We have investors who are looking for yield, who are looking for return, and they really feel that, we are not going to get, if we actually embrace in a very sincere manner the ESG initiatives, we are not going to see yield as we would if we, took that out of the equation, or reduce the bucket in our investment portfolio. So we've got these two competing priorities, or I'd say they're different constituents. The other thing is, we also have to hold the financial institution, or whoever it is, even if it's a corporate, their feet to the fire and make sure that they are sincere in their effort, and which is where the greenwashing comes in. And what is greenwashing? It's basically an organization deliberately misleading its customers and its investors on its green initiatives. So there are tons of examples like that. So you might see somebody selling a product which is wrapped in a green package with like leaves and plants around it, and it's called natural, all natural. But if you do the actual testing on it, there's nothing natural about it. But this is just to mislead. So the packaging is one, the wording is one, the advertising is one. We see this a lot in fast fashion, where companies like Zara, Shine, etc., they are very much involved in poor practices, modern slavery, as we would call, giving very little compensation to their workers in terrible factory conditions in third world countries. So that's, we also have to make sure that these, that we're holding their feet to the fire. If we need to boycott their products, if we need to send them a message in some way, we need to do that. Similarly, what I've seen sometimes in financial institutions, there is a lot of talk about ESG, CSR, all of that. All of that is is mentioned in the marketing part of their annual reports. And they will, many of these institutions at the beginning of the year will come up, or beginning of the decade will say, oh, by 2030, we want, X% women on the board. By the end of this year, we want, to hire X number of people of color in our organization, or we need to open factories in this part of the world. But what you will see is that 12 months later or by the end of the decade, we don't get the numbers of where they are from where they started. And again, we need to question, as consumers, we need to question where the progress has been. And really these institutions also need to step up and keep their word. So there is a lot of work to be done. I don't necessarily know what the clear answer is, but there is, and then there's there's greenwashing, but there's another disturbing aspect, which is green hushing. So green hushing is when all these organizations who really want to do good things, who really want to incorporate ESG and CSR, et cetera, into their business models and operating models, have to now, they do these, they continue with these initiatives, but they don't talk about it because they're so afraid of the backlash. So they are hushing their efforts. And that is also a very bad sort of turn of events. And we want to make sure that we reward organizations that are on this path. So, one, we need to hold these organizations accountable. On the other hand, we should reward the ones that are actually, making the effort. So, and when it comes to ESG, I've seen, there is a lot of innovation happening, especially when it comes to products, when it comes to capital deployment. So there is, when it comes to financial institutions, yes, there is innovation happening on the side of sustainable finance, but there is also this backlash, and it's kind of almost like the regulation and the innovation. Here we've got the naysayers versus those who want to do good.
Thanks, Samrah. It was wonderful talking with you. I know there are many more topics on which we can talk about it, but somewhere we have to close today. So any last comments from your side for the audience on the overall banking innovation and technology?
Yeah, I mean, I think I mentioned most of what I have to say, but I think one of the things we have to keep in mind is that currently the banking industry is going through massive disruption. And also there are tons of opportunities in the disruption. So, where do you find the opportunities? And like I said, it is really important to be bold. And I help a lot of large financial institutions in their AI transformation efforts. So I think the other thing that needs to be revisited is the entire digital transformation roadmaps that were developed maybe, 5, 6, 10 years ago, and go back, look at it from a tactical as well as a strategic, from a strategic perspective, and make sure that you are keeping those roadmaps relevant, because this is going to be an evolving process. There is no end state at this point. At some point we thought digital transformation, there's going to be an end state, but at this point there is no end state to digital transformation. There is no end state to AI transformation. So it's very important to have future-proof your processes and your mindset. And the other thing I'm going to say, digital upskilling across the board when it comes to your employees, when it comes to your board, when it comes to your C-suite, is extremely important, because all of these are what is going to give an institution its competitive advantage. So it's not that how you've embedded it in one model, but it's actually how are you kind of permeating it across your institution. So that would be my advice: to be bold, to revisit the initiatives that you've been conducting for several years, and now make them future proof.
Thanks, Samrah. It's like a very important message. Be bold. And I think wholeheartedly you have to embrace the transformation. That is what I think I can get from you. And for that, it means all your ranks, everybody has to really embrace digital upskilling or revisiting the digital transformation plan, which you may have prepared in hush hush somewhere before COVID or during the COVID. Good time to now have a hard look at that, because so many other things have come, and the financial sector is, of course, you can say that lot of opportunity as well as a lot of challenges. But yeah, you have to play bold. That is the clear message. So thanks, Samrah. It was really wonderful. We got a lot of insight. So many topics you have covered for us, and I know we can go on because there are many more topics. So we will see if we can schedule one more interview with you. So once again, thanks from all of us. Thanks for sparing your time for and providing those insights. Thank you.
Thank you, and thank you to your audience.
I have done many interviews, and those episodes are available on our organization website. And I'm looking forward from feedback, input from all of you on this. Thank you.